Unbiased Reveal channel. Welcome to the deep dive. I'm Jenny.
And I'm Peter.
Okay, so we've looked at a whole stack of sources this week, and honestly, it paints a picture of, well, financial madness, maybe.
That's one way to put it, yeah.
So here's the quick take, like the 30-second version. The crypto market, it feels totally trapped. Like back in the 2022, 2023 deep freeze, extreme fear everywhere. The fear and greed index is just stuck down at 32.
Right, really low.
But, and here's the crazy part, while the mood is just awful, all the big structural things, they're actually moving forward. You know, geopolitical peace stuff, new altcoin ETFs launching, regulations speeding up.
Yeah, fundamentally positive signals.
Exactly. But the market, it's ignoring every single one. Good news comes out, and it's treated like an allergy or something. It's just a spectacular contradiction.
It really is. It's probably the closest thing to collective financial paranoia I've seen in a while. You've got clear progress happening, but this toxic short-term feeling is just completely dominating.
Yeah. Well, before we try and unpack all this weirdness, just a quick note for you listening. We do have the best crypto referral link right there in the description if you're feeling brave enough to navigate these strange waters.
Brave is right.
Okay, so let's get into this bearish hangover. Why does everything feel so terrible? And let's start with the calendar, because the irony here is just chef's kiss. We often look at seasonal trends, right?
You do.
And historically, October and February, they're supposed to be Bitcoin's big months, the two strongest ones, usually.
Usually, but not this year. February closed down, what was it, a pretty dismal minus 17%.
Ooh.
Yeah, and October, it just closed, also negative. So the two historically best months just completely fell flat this year.
Wow. And if you look beyond Bitcoin at Ethereum, it's down like 12% combined over just September and October. And that kind of performance, it's not just weak trading, is it? It feels like it cements this really deep psychological fatigue in the market.
Oh, absolutely. And you see that fatigue amplified on the institutional side, too. We've been watching 3 straight days now of net outflows for both Bitcoin and Ether ETFs.
3 days. Okay, so what message does that send?
Well, it basically says traditional finance players aren't just waiting on the sidelines. Some are actively pulling capital out. And that just feeds the fear cycle. You know, it cements it further.
And this fear, it creates this thing we're sort of calling the good news trap. You see it perfectly with the U.S.-China trade war news this week.
Oh, yeah.
So Trump and Xi met. They agreed to delay or reduce tariffs. The whole rare earth trade thing is continuing. I mean, this is a huge geopolitical de-escalation. Should be good, right? It stabilizes a massive risk.
In any rational world, yes, that's bullish news. But the market's reaction, pure sarcasm, basically. There was a tiny spike, then prices just dipped again.
So how did they interpret it?
They called it Lido exhaustion.
Lido exhaustion. Okay, that sounds incredibly cynical. For listeners maybe not swimming in trading slang daily, what does that actually mean here?
Right. So it's basically market slang. It suggests that any positive news, doesn't matter if it's world peace breaking out or a new ETF.
Yeah.
It just gives an excuse for traders who bought earlier on spec, maybe held staked ETH via Lido or something, to finally dump their large holdings. Get out.
So the peace deal was just exit liquidity.
Pretty much. The thinking was they only delayed the trade problem. They didn't really solve it. So speculators took the brief price bump as their chance to exit cleanly. It boils down to this. The market is afraid of good news.
Wow. Global peace is just an exit event for grumpy traders. That's some next level pessimism right there. Okay, so if the market's that cynical about global stuff, what's happening domestically that's maybe feeding this structural malaise?
Well, there's the ghost in the machine, as you might call it, the U.S. government shutdown. Since October 1st, it's been shut down a full month now, could even set a new record. And this doesn't get talked about much in the crypto news cycles, but it's very likely the structural reason for a lot of the current delays we're seeing.
That's a pretty strong claim. Isn't most of the bad sentiment blamed on, inflation, Fed worries, that kind of thing? Why would a government shutdown hit harder than big macro anxieties?
Because the shutdown has this severe immediate impact on regulatory progress. Everything just gets stuck. Administrative limbo.
Oh, okay.
So crucial milestones like getting clarity on the BlackRock ETF staking or finalizing that Market Structure Act, they haven't been denied necessarily. They're just sitting in a queue behind locked government doors.
Right.
And this inability to process these expected catalysts, it feeds that feeling that nothing good is happening or nothing's moving forward.
Okay, that structural delay.
Yeah.
It brings us neatly to maybe the most ignored and, frankly, the most baffling news of the week. While everyone was panicking, major spot ETFs for altcoins actually got listed.
Yeah, this was big. Solana, Litecoin, and HBAR, they're live. That brings the total U.S. crypto ETFs up to 5 now.
For real. Solana ETFs.
Yep. Specifically, the ones from Bitwise and GSAL, they're already seeing some inflows, apparently, and they even support staking. Now, we need to just pause on this for a second.
Okay.
In any other market cycle we've seen, a spot SOL ETF getting approved, that would be explosive. Market-leading news, we'd be talking about huge price spikes.
But not this time. It just landed with a thud.
Pretty much a shrug, yeah. Immediately got labeled as more Lido exhaustion. Resulted in really soft price action for Solana. It's like, discovering the cure for cancer and the world just goes, yeah, but what about the traffic tomorrow morning?
That's bleak. Okay, so connect that to the bigger picture then, the BlackRock staking puzzle. That's still a big dampener on confidence, right?
Huge. Because Grayscale's ETH ETF, that got approved for staking back in early October. But BlackRock, the biggest, most trusted name in TradFi, still hasn't received staking approval for its ETH ETF.
And we were all watching that October 30th deadline, weren't we? And nothing. Silence.
Exactly. Now, technically, the ultimate deadline isn't until April 2026, way down the road. But this lack of clear, timely progress from BlackRock specifically, that's definitely unsettling the institutional crowd.
So is there a link here?
Yeah.
To the shutdown?
Well, this is where we hypothesize, right? Approving staking for an ETH ETF, it's complex. It needs a lot of regulatory review sign-offs.
Sure.
Given the government shutdown. It seems highly probable that the bureaucratic backlog is hitting these complex, really crucial approvals the hardest. The silence is more likely governmental gridlock than, say, institutional hesitation from BlackRock itself.
Right. Okay. That makes sense. Speaking of regulatory gears grinding, what about the Market Structure Act, the Clarity Act? That passed the House, but it's stuck in the Senate.
Yeah, stalled there. And less clarity, it's what everyone wants, especially institutions. Finally defining which coins are commodities, which are securities.
The Holy Grail.
Basically. Without it, you have the SEC and CFTC just playing this constant game of whack-a-mole regulation. But there is good news here. Senator John Bootman, who chairs the Agriculture Committee, he confirmed he's pushing to accelerate work on it. He expects it to pass by Thanksgiving, November 27th.
By Thanksgiving. Wow. But he also stressed getting it right over just getting it done fast. What does getting it right actually mean for the market?
Well, it probably means avoiding the kind of rushed regulations that, led to those big enforcement actions against Coinbase and Binance.
Ah, okay. Learning from the past.
Exactly. Getting it right means building a clear, durable framework that big money institutional funds can actually rely on for the long term. So it suggests that even while the shutdown stalls the day-to-day stuff, the political will to get this long-term regulatory certainty, that's still moving forward, kind of behind the scenes.
Okay, let's pivot a bit. Let's talk corporate crypto holdings, because this is where the market's split personality really goes on display. MicroStrategy, MSTR, the big corporate Bitcoin buyer.
The OG.
They just hit a quote-unquote milestone, which they seem to celebrate with maximum sarcasm.
Yeah. So S&P Global gave MSTR a B rating. Junk bond status, basically.
Oh, shit.
On the surface, yeah. Because a lot of traditional institutional funds, they have mandates. They need higher ratings, A, B+. So this B technically prohibits them from buying MSTR stock or debt. Sounds bad.
Right.
But MSTR's spin was, frankly, brilliant. They turned around and celebrated being the first ever rated Bitcoin strategy company, period.
Okay.
Their argument was this rating actually opens them up to a whole different class of institutions, the ones that just require any rating, regardless of the grade, before they can even consider an investment.
And did it work?
Well, their stock actually rose 6% on the day they announced it. So yeah, it kind of validated their whole high-risk, high-reward approach. Look, the B rating just confirms what everyone knows. MSTR is heavily concentrated in a volatile asset.
Right.
Expecting an A rating would mean thinking Bitcoin's already super stable, which kind of defeats the whole point of their strategy. So it's actually a pretty logical rating for what they do.
Okay, so that's the conviction side. Now compare that to what's happening with some ETH treasury companies. We saw this company, Zilla. They were forced to sell $40 million worth of their Ethereum just to buy back their own stock. Why on earth would they sell their core asset like that?
Yeah, this ties into a slightly complicated metric called MNF, market value to net asset value.
Okay.
Basically, if the company's stock price falls below the actual market value of the Ethereum they hold on their balance sheet, meaning their MNF ratio drops below 1.0, shareholders tend to panic.
Wait. So if their stock trades for less than the ETH they actually own is worth, they feel pressure to sell the ETH. That sounds like a potential disaster for ETH supply if that catches on.
It absolutely is. It confirms one of the market's big fears right now, that these ETH treasury companies could be forced liquidators. They might have to dump ETH just to prop up their own stock price. The pressure is definitely real.
Any other examples?
Well, the second biggest holder, SharkLink. They apparently have a $1.5 billion buyback plan ready to go if their MNF starts to deteriorate. So, yeah, it looks like a systemic risk brewing.
Okay, that definitely sounds like a ticking time bomb on the supply side. But there's a counter-narrative, isn't there? And here's maybe our first golden sentence moment, a reminder to watch actions, not just fear. The phrase is, don't watch what they say, watch what they do.
Exactly. Because while Zillow was selling off its ETH, Bitmain, another major player, was doing the opposite. They were consistently adding to their ETH stash. Recently bought another 7,600 ETH, worth about $30 million.
And their MNF.
Comfortably above 1.0. So it shows that some really sophisticated corporate treasuries, they're actually using these depressed prices as a buying opportunity. It confirms that bullish conviction still exists, even amid the fear.
So we are seeing these quiet bullish undercurrents, even with all the pessimism. Look at regulatory appointments, too. President Trump just appointed Mike Selick as the new CFTC chairman. And Selick is known to be pretty pro-crypto, right?
Yeah, openly pro-crypto. He's served at both the CFTC and the SEC before. And crucially, back in 2023, he publicly supported XRP, argued it's a commodity, essentially code, not a security.
Wow, that's a big deal for clarity.
Huge. And it might actually explain why XRP has been relatively strong lately compared to the rest of the market. The political gears are definitely shifting, subtly, but shifting.
And then you had Senator Loomis, who's always banging the drum for Bitcoin.
Yeah.
She publicly reiterated her point again, said if the U.S. government just bought 5% of the world's Bitcoin supply, held it for 20 years, it could potentially cut the national debt in half.
Yeah, a massive long-term bullish statement.
That got almost completely ignored by mainstream media, right? Because everyone's focused on the short-term panic.
Exactly. Meanwhile, you've got Ethereum making this really significant but quiet institutional pivot. The Ethereum Foundation just launched a new website called the Institutional Liquidity Layer.
Okay, what's that about?
It's explicitly marketing Ethereum to traditional finance, calling itself the backbone of the on-chain economy.
So less tech bro, more.
Yeah.
Enterprise sales pitch.
Totally. They're highlighting stats like 10.2 years of uptime, almost 1 million validators now, capturing 75% of the real-world asset market share, over $170 billion locked in stablecoins on Ethereum. This isn't a tech demo, it's an enterprise-grade infrastructure pitch.
And what's the long game there?
Well, Ethereum's clearly positioning itself for the long haul. They're even integrating things like AI readiness with new standards like ERC 8004 and X402, and you have major banks like Standard Chartered predicting that on-chain assets will hit $2 trillion by 2028.
$2 trillion.
That's a
50x increase.
50 times, yeah. And they predict the vast majority of that value will end up residing on Ethereum. So that deep institutional conviction, it's clearly still there, regardless of what the daily fear and greed index says.
That's fascinating. And remember, SharpLink, the ETH treasury company with the buyback plan. While MicroStrategy got that junk bond rating, Bernstein just gave SharpLink an outperform rating.
Right. With a $24 price target by 2026, that's like 75% upside from here. And they threw out an ambitious long-term target, too. $15,000 for ETH by 2030.
15,000.
Yeah. So again, it shows these long-term institutional targets are still very much in play. They see the current mess as a potential discount.
And technically there's improvement coming too, right? The Denkin upgrade.
Yep. Denkin, also known as Pusa Card, confirmed for December 3rd. This upgrade is expected to boost ETH transaction speed by maybe 2 to 3 times. So it directly tackles one of Ethereum's biggest scaling challenges, just as institutions are looking more seriously at onboarding.
Okay, so let's try and wrap this up. What does all this contradictory stuff mean for you, the listener? On one hand, the market mood is just stuck in deep pessimism. Every single positive catalyst, peace deals, new ETFs, faster regulation gets treated as a reason to sell. And that leads to our second golden sentence today. The market is afraid of good news.
It really seems that way. But structurally, beneath the surface, key progress is happening. The market structure bill is moving. We have pro-crypto appointments. Big institutions are clearly focusing on ETH. Some corporates are still accumulating Bitcoin and Ether.
It's just delayed.
It seems mostly delayed, primarily by this U.S. government shutdown. The catalysts haven't really been denied or canceled. They've just been postponed, put on hold.
Okay, so here's the provocative thought then. Historically, November is Bitcoin's best month. Average gain is something like 42%.
Huge average, yeah.
So if all these positive structural things are just delayed by the shutdown, not actually denied, is this maybe that critical moment, that be greedy when others are fearful? What actually happens when the government finally reopens and that whole backlog of regulatory approvals suddenly hits the market maybe all at once? That's the big open question for you to think about.
Definitely something to ponder.
So remember the two key takeaways from our deep dive today. The market is afraid of good news.
And don't watch what they say, watch what they do.
Welcome to subscribe to my channel and like this deep dive so that I can continue to make more deep dives.
And don't forget, we have the best crypto referral link in the description.
One last time, check the description for that best crypto referral link.